Okay guys, welcome back for another trader development series video. Okay, this one's GBP USD on a 5-minute chart. This is a trade that we did take on Friday, Friday the 26th of March in the New York session. Okay, so I'm going to play it through and then we can see if you guys can spot the equal lows that get ran before I mark it up, alright? I'll make this video as quick as I can so it doesn't waste too much of your time. And then in this video as well, I'm going to be talking about why I had a certain target for this setup. Right, okay, so at this point here, you should be able to see now the setup, right? Now, this is something that you need to be sort of trying to train your eyes to see. I'm going to go through the markup now. So we've got the equal lows, which was this entire level here, okay? I'd even include this one here because it was a low, okay? Now, when you've got a low that's really close to taking out these lows, because it's already in that sort of level, I don't like to use that as the breakage structure. I want to see this point here, okay? That's the higher level I'd like to see. Alright, so we did get our stop run. Alright, so let's have a look. Stop run, which was, sorry, down here. Okay, and then we had our equal lows right here. Okay. Now, when you've got all this here now, you've got your confirmation of a potential setup, right? Now, it's not always just enough for the pattern, right? You have to have an underlying premise about where you're trying to get to as well, and I'll show you how I figured this one out for the specific trade. Right, so that's our structure inversion point, or your breaker structure. Again guys, whatever you want to call it, it doesn't really matter out of these two, SIP or BOS. So structure inversion point or breaker structure right there. Okay, and what you're doing then, you're going back to the level that caused that move out of there. So see this down candle here. If I zoom in a little bit, you got this down candle here that caused a fast move away. Okay, so that's our load level that we're looking to get in on. So if I drop a horizontal ray right on the body of that, so I'm not looking at the wicks, I'm looking at the body, and that's what I'm interested in getting in on. If I'm looking for an entry, my stop loss is going to go below the wick, the lowest wick of that load level itself, so that swing point. Okay, I want my stop loss below there. Now you can give it a little bit more of a gap if you want, just to make sure you give it a little bit more of a breathing space. But now let's talk about where are we trying to get to in terms of targets. All right, now if I scrunch the chart up quite a lot here, okay, and we're going to go back a little bit. Okay, so if I come back to here, all the way back. Okay, right, so where this dotted, right here now, you can see the dotted line there, that's where price is currently sitting. All right, now what are we trying to target from this level? We've got these equal highs here, yeah, okay, and we've also got this pullback here, right? So my area of interest was to try and get back above these highs into the bottom of this point right there. Okay, so see this little green candle here, the wick of that candle. I want to fill in this price acceleration zone here and then take out these highs. Okay, so that was the overall idea for this trade. We did have a nice target to go and get, so these two highs here. Okay, so again, going into target identification. And now if I go all the way back to the end of the chart where price is currently sitting, okay, this is what we're looking at, right? So we've got our target, we've got a directional bias. Okay, we're making higher highs, higher lows. Okay, now when you're looking at these points, it's quite good to have a look as well at seeing what is getting ran before we move in a direction, right? So in this case, you've got equal lows here, they get ran, it goes higher. Okay, all the way up here, you've got lows here, they get ran, it pumps higher. Okay, and eventually we come up to this point here, right? So you've got the equal lows, ran, went higher. All right, so over and over again, just looking at what direction it is and seeing which way the impulses are going, right? So the impulse up, consolidation, impulse up, consolidation. This was a stop run, then we had an impulse up, so we're expecting what? Consolidation back down, and maybe putting some sort of equal lows to run the stops to go higher. Okay, so we'll keep playing this out now. Okay, so here we go. This is why we say never trust equal highs or equal lows, and you'll see it in a moment. And this is what makes it a much higher probability setup. Okay, so look at what we've got here now. We've got a set of equal lows. Okay, I'm not going to put EL on there, just going to highlight them, okay, with a red box. Okay, so we've got equal lows here. We've got a load level right there. So anybody that's going long on these bounces now is going to have stop losses sitting underneath. And what we're waiting for is to run through them stops, grab the liquidity, activate on the load level, okay, and that's what the algorithm is going to be looking to get into, this specific down candle. And then we're looking for a move higher, okay, because we've got our higher targets that we're looking for. Okay, and now this is really important as well with the timing of the setup, right? So I like to trade New York. With the setup now, if you got the first hour of New York, you shouldn't be looking for a setup in the first hour, okay, because that's not where the setup occurs. So when New York Open happens, whatever time of day that is for you, give it an hour. Don't trade for the first hour of New York. Then the second, third, and fourth hour of New York is where you want to be looking for your entry points. Okay, so that's where you get the highest probability setup. So it's not just about the pattern; it's about the time of day as well. Right. So I have talked about it in the London series. You know, with the London Open setup, you're looking for the first 3 hours of London. That's where a lot of damage is caused, and then that's where you're going to be looking for your setup. Right. So in this case here, 7 a.m. here. So this is sort of London Open area. Okay, so we did have the stop run there, then it moved away, and this is why I like the New York setup, because it gives you an idea of what London's already done, and then we're looking for another continuation for that that currency pair. Okay, so anyway, moving on. Okay, so we've got the equal lows there, nice little bounce along there, and then eventually we will plow through it. There we go. So there's a plow through, and that's our entry point right there. All right, so this is where we were looking for our entry, right on that line. Let me just get it. Okay, right there. Okay, and then our stop was sitting just underneath here, and then we're looking for a target to this level here, because 6.41 to 1. Okay, so RR. Okay, and you can see it just reacted straight there, and it went straight to target pretty much. Like so, very few shallow pullbacks on the way up. And there you go, that was target hit right there. Okay, so that was a New York trade. I didn't measure the pips actually on this. It was, let's have a look. So we did take 52 pips, nearly 53 pips out of the market, right? So very nice trade. All about the time, the pattern, what's gone on previously, and we've also got the target, which was back here. Okay, so let me just make this full screen. Okay, and we'll scrunch this up, and then there's our target there. Okay, so we're looking to come into the load level here that caused the move down in order to take out the stops that were sitting above here, right? So I know it's a little bit scrunched up at the minute, just so I can show you guys the chart. But again, it goes to show that the you know, the setup's still playing out, it's still very accurate. And I do know that some of you guys in the group also caught the same trade, right? I know one of them had a slightly higher entry off the wick of this, which is fine, absolutely fine. You know, as long as you're getting the overall setup that you're looking for. But this is how you want to sort of look at it, okay? Like London Open, you're going to get the damage, all right? Very difficult to get in, you know, a tidy entry. New York, leave it for an hour in New York Open, then you're going to get a move down, all right? You should already be able to see all this playing out through London, and you'll be around here somewhere coming into New York. And then New York, you're going to be able to measure, mark out your area where you want to get in, and then find your targets as well, right? So that is how you sort of work out your directional bias and what you're looking to get in on as a position, right? So that is it for this video, guys. I will see you in the next one.